Hi folks, Lee Gettess here with the market sense for the week of July 23rd, 2013. The charts I look at and stare at all day come from the Trade Navigator software, and they are really very easy on my eyes. That's why I use these color combinations. In the weekly bond market chart here, you can see we've off of this big long, more than a year long sideways, big wide swinging sideways, we've broken down, so you'd have to assume the trend is down. And they've been trying to go back up for a couple weeks here. This week so far is being rather quiet. The red line here, the upper moving averages, let's call it the 136 area. I think between that and this middle moving average at 134.04, I think they're very likely to just kind of stay in that range for this week and just sort of consolidate everything. Now, I'm not telling you that they can't go back down here to 132.16 or up to 139.20 even. Both of those things are possible eventually. In fact, the likely thing would be for them to go down and make a little higher low down here someplace near this lower band and then rally back up to this middle Keltner channel, because that would coincide with testing these previous lows that they broke down from, and that price action there is just how normal markets behave. Although I will caution you, the Fed is in this market buying heavily, so this isn't exactly what you would call a normal market. But anyway, that's kind of what we're looking at. I suspect they'll be rather quiet this week. Anything that moves way out won't be a shock, but I'm not really expecting it. Now in stocks, the S&P, well, we've got a mixed bag here. I'm going to show you something a little different this week. We've got resistance up here that actually calculates at 1697 and a half, 1700 level, close enough for me. And we've got support down around 1664, and you can see they've done very little so far this week. Now, this chart actually looks reasonably bullish. I mean, it took them 5 weeks to break down to this low, and then in 3 weeks they're back up to new highs. A good strong momentum here and all, and that, so this looks like they could go substantially higher. And if I looked at this chart in a vacuum, that's what I'd say. They look like they can go a lot higher. I want to look at the NASDAQ and just show you something different here. The NASDAQ, this is a weekly NASDAQ chart. The NASDAQ did the same thing, broke down for 5 weeks and then rallied back up. But last week actually was a reversal week that closed lower than the open. And this week has gone a little lower and can't seem to bounce back up. There was divergence in the momentum when they got to those new highs, and this market actually looks like it's making a top. Now, the S&P and the NASDAQ are not the same markets, and they can move in opposite directions, but we're not going to get a major trend in the stock market in either direction until they agree. And right now, the look of the S&P to go so much higher is really, really modulated by how bad this market looks to me. Now, if they turn and just blast up to new highs here, fine, then everything's bullish. But at this point, the NASDAQ looks like it might pull the S&P down with it. So I'm just kind of cautious and keeping my eye on everything here. Just wanted to pass that along to you. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see what we think.